So far, I've taken a 10.5% hit, but I've still outperformed TQQQ by 20%. Hey everyone, welcome to Million Dollar SIP, where I'm documenting my real-time journey of growing my portfolio from zero to $1 million in 10 years using a hybrid SIP strategy. This is day 20 update, and I'll take you through my investment decision, trade execution, and performance update. I started, like always, by checking whether we are in downtrend or uptrend. It is very obvious that we're in downtrend, but still, let me run through how I decide on my daily investment amount. As both opening price and closing price of the previous day candle are below the 12 EMA, my rule states TQQQ is in downtrend, and hence my weekly investment limit that I have set is $1,000 to $1,250, which means $200 to $250 per day. Next, I switched to 5 minutes time frame and waited, as always, for the price to go below the 12 EMA and then bounce back above it. Price went below 12 EMA at 9:25 Central Time, and at 10:50 it crossed back above. But I waited for confirmation candle, which I got at 11:05. So I took an entry where I bought 4 units at 62.10, investing $248. 4 units because of my daily investment limit. Today, TQQQ gained 1.95%, marking its second consecutive green day after a rough week. While this upward movement might seem promising, it is too early to confirm a trend reversal given the current trade war uncertainties and macroeconomic factors influencing the market. The Fed's stance on interest rates could impact market direction, which is happening later this week. Technically, gap filling theory is also in play. On March 7th, TQQQ closed at $67.40 but opened at $64.10 on March 10th, leaving an unfilled gap on the chart. Gap filling theory suggests that price gaps tend to be revisited and filled over the time depending on market volatility, which could happen in days or weeks. Given this gap around $67, I expect TQQQ to rally up to this level to fill the gap before likely resuming its downtrend. So I'll give you one example of this gap filling. This pattern has played out before, where on January 24th, TQQQ closed at $86.73, but it opened significantly lower at $77.54 on 27th, creating a huge gap. But the price rallied and filled the gap within 4 days, proving the reliability of this technical concept. While the short-term trend suggests some upside potential, broader market conditions remain uncertain. The Fed's decision, trade war tensions, and overall economic outlook will play a crucial role in determining whether TQQQ continue its rally or resumes its downtrend after filling the gap. Now, let's take a look at portfolio performance. So far, my total investment stands at $4,372 with the latest TQQQ price closing at $63.09. Which brings the market value of my holdings to $3,911. My average cost per unit is currently $70.52, meaning I'm sitting on a net loss of $460, which translates to a 10.5% decline. Since I started this investment journey, TQQQ has dropped by 30.5%, but my portfolio has declined by only 10.5%. This means I have successfully outperformed TQQQ by 20% so far. This demonstrates the effectiveness of my hybrid SIP strategy, which helps mitigate downside risk while allowing me to accumulate more units at lower prices. By following my structured approach, I continue to reduce my average cost while staying ahead of TQQ's overall decline. So that wraps up day 20 of my investment journey. I'll continue sharing daily updates, and at the end of each week, I'll post a weekly performance summary to analyze my overall progress. If you found this update helpful, don't forget to like, subscribe, and follow along to see how this journey unfolds. See you in the next video.